Hey, greetings. It's Dr. Jeffrey Scott. This is my weekend market update. It is for the week ending Sunday, March 23rd, 2025, although it'll be up on Saturday sometime. Email address, the standby hgsidoc at gmail.com or marketmripro at gmail.com. Title this one, Markets Rally into the Weekend. What will next week bring? The big day is probably going to be, I think, is it April 2nd when we find out about the reciprocal tariffs. Those tariffs to me actually make more sense, not to be political, because why should we pay any different than another country pays when they import our stuff? We should pay the exact same thing here. So maybe those will be looked at as a relief, and maybe that'll be the end of this. But um, right now, it's a week at a time, a day at a time. Frankly, it's a presidential statement at a time about tariffs. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. I like to use my tools to show you how I do top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And I have tools for multiple platforms, but consider myself an independent trader. If you're looking for the wealth charts video, I pretty much do those now just at stocksanddocs.com. It'll be posted on Monday morning before around 8:30. If you like to get notification of when I have live meetings, educational seminars that I usually do online for free, discounts on my tools, just join my Google group. It's called Top Down Trader. It's not for solicitation. It's where I post things during the week that I don't always put up on YouTube. You'll get discounts and other things there. Again, I don't charge you anything. I don't have ever plan on charging you to be a member of that group. And ultimately, I will move that group to Discord or something equivalent when I have more time in my life, because right now my day job is almost killing me. Orange County meeting in 2025 is going to be June 6th through 8th at the Residence Inn and Suites. I used to think it was at the Fairfield Suites, which it was last year. This is a sister property right next door in the same parking lot. Greg Mills at GAM72054 at AOL.com has the information. Seats are filling up fast. Typically 4 to 6 speakers. I should announce in the next week or so who they are. $300. You'll get a lot of me and a lot of my friends. We are in multiple platforms. HGSI, I'm not in it, but much of what I've derived and built comes from it. It was from the words and wisdom of Ian Woodward that are probably incorporated best in that platform. I have add-ons and wealth charts and TradeStation and TradingView, soon to be a Metastock, and we'll be using today a new tool that I recently launched called the Market MRI Pro. For information about any of these, just email me at that email address, hgsidoc at gmail.com or marketmripro at gmail.com. Is there a recession in our near future? I think this is a critical question. And right now I'll continue to kick the can down the road saying, yeah, there always is a recession in the future. It's just not imminent. Notice that on the top we have the 10 minus 3 months and the 10 minus 2 year treasuries, that whenever we get below the zero line, the inversion, and come back above it, it's ultimately followed by a recession. This time will not be any differently, but the question is when, and you can see that they can be delayed quite a bit from when they recover, and you can get a double dip, which we seem to be getting in the 10 minus 3 months. The other thing to point out is that we're not seeing any evidence of credit tightness, and notice what happens around recessions. And the Fed Diffusion Index came out on Wednesday or Thursday, or even Friday. I can't remember which day it came out. I guess it came out Thursday, and it was supposed to be 12. It came out at 12 and a half. Recession start from minus 20. So I feel comfortable saying that there's not a recession imminent. Why does that matter? It matters because a bear market in a strong economy has very different outcomes than a bear market in a recession. I'll just leave it at that. Know your news and earnings. We got PMIs and Case-Shillers, new home confidence. We've got a couple Fed speakers this week, jobless claims, revised GDP. And then down here we got something that we know the Fed looks at, and they actually just raised projections at their Fed statement, and that is the ever-loved PCE, personal income and PCE complex of information. Still got lots of earnings. I like Chewy, but then I saw it had earnings, so I probably would hold off on that. It's been sort of a pay me if I'm good and punish me if I'm bad earnings season. So it's really a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And then you have confusion. Look at PDD. I have a position in that, and it came out with earnings a miss on Friday, and I knew it would be a rough day for me with that. It ended up closing up on the session after opening lower. You have to be very careful going into earnings here. If you have a big cushion, that might be okay, but you don't want to watch a winner turn to a loser, and if you're losing, you really don't want to go into earnings because then it can become even a bigger loser. Once again, my Google group's called Top Down Trader. I would um, welcome you to join. If you don't want to join, hit the subscribe on the YouTube, hit the alarm. You'll get notified when I post them. Half the time I post them, and the other half the time I just stick them in my Top Down Trader group because it's easier. And often I'm on the road and I don't want to, wait for it to load from slow hotel internet. And I think that's it on the slides. Let's go look at the charts. So for long-term watchers, I've changed the format some where I do very little in PowerPoint, and that's because I've been able to build in almost everything that was in the PowerPoint into my Market MRI Pro. This is my top-down tool of choice these days. I got to point out, I think I've got a little bit of a data error in that when I look at other sources, the Russell's still going to be down. But when I looked at other sources, the diamonds and the spiders were just a teeny bit positive. Here they're showing a teeny bit negative. The Qs were up 0.33. That is accurate, at least from the other sources I could find. I've let Praveen know, but he's a little bit behind me in time, so it'll be updated eventually. You could see that all these finished up near their top. Even the Russell, you could see that just tells you that it recovered during the day and that they had opened up considerably lower, as you could see here. Volatility on the session was down as well. If I look out over 5 days, and I think this is pretty accurate, the diamonds led us higher. Everything was up a little bit this week, finishing, again, this is the Friday closing range, and you can see volatility on the week was up 3.82. If we look at the new high, new lows on the NYSE and the NASDAQ, we're still tracking to the negative. If we look down here at the S&P 1500, the NASDAQ and the NYSE, the gray bar is a day ago, and you could see not many sectors were up on Friday, only 23% of industry groups and 30% of stocks in the 1500, 37% of industry groups and 40% of the stocks in the NASDAQ, and in the NYSE, 20% of industry groups and 31% of stocks. So overall, it was a negative session in the U.S. markets on Friday, but the indices held up better. If we look at moves in the S&P 500 sectors, leadership from communications, discretionary, and technology. If you are a risk-on sort of person, trader, that is what you want to see, and that's where the strength was and the weakness was materials, real estate, energy, utilities. Staples was actually only a little bit negative on Friday. So as a Friday return to what we like to see of a risk-on market, and we're going to go back to a tech-driven, or was it just a one-day rotation and profit-taking on the recent leadership? I think it's the latter. I don't think that was an all-clear signal. If we look at what was leading on Friday, we have a bunch of themes: blockchain, internet, biotech, software, cloud, retail. Here's Norway, artificial intelligence, telecom, e-commerce. So again, a reversion to sort of these risk-on types of plays. If I look at over 5 days instead of just one day on the change department, You could see energy, financials, um, healthcare, communications, industrials were leaders. In fact, over 5 days, the market looks pretty good. And again, that defensive play Staples was a laggard on the week, although not lagging much. It was just 0.23 to the negative side. So that gives me a sense of what the market's doing. I like to look at my timing model. I'm on the weekly chart. It's this bottom line that matters. Red, 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 red. So all four of my sectors I've watched, spiders, Qs, diamonds, and Russell, on the weekly remain in a sell mode. Notice the weekly dojis that formed on the spiders and the Qs, sort of an indecision week. That could be a good thing because that could be the sign of either a continuation, but also could be leading to a reversal. There's no signal on the 3-month or 13-week new high, new low. Let's take a look at the daily. Here it takes a second to flip-flop. Okay, here's the daily timing model. And again, just like the weekly, it's all in a sell. So with 4 daily, 4 weekly, and sell signals, it still says there's caution in the market. Now, I'm going to look closer at the indexes. It doesn't mean I can't be nibbling, but I have to, when I see this 4 and 4 signal, I'm going to be cautious. Curiosity, has the monthly signals changed at all? And the monthly is still only in a sell signal on the Russell, which has clearly been the weakest. So I think the ultimate longer term trend is probably still higher looking at the monthly charts, but we're in a choppy sideways market. We're going to have good days and bad days. To me, it's just not an all in market, is how I look at it. Guppy charts, I look at these to get a signal of kind of what's going on in the markets from a longer term perspective. And when the markets break down, you'll see these flip flop. You can see that happening here. They're pinching and reversing. And you'll see price get to lower and lower parts. If we look at where we are today compared to the 22 lows, even compared perhaps to what we did in here in 23 lows, we've barely broken the top line. So if you're looking for long-term weakness and concerns, whether I'm looking at the normal weight, the cap weight or the equal weight spiders, cap weight or equal weight Qs, the diamonds, the only one that's got me worried here is the Russell. So that would be something that would make me think that this is still going to be a shorter term move and not a full-fledged massive bear market. If I look at the indexes, I like to spend a little bit of time on those. All right, and I'm looking at the ETF equivalents, and like I said, something is off a little bit on the close of the spiders and the diamonds. So I can highlight any of them, hit this, it'll make it big. So this was an area of a double top, false breakout perhaps, and a big drop down. For indices, I like the red 200, 17 is green, the 50 is 5. All of them are simple. And the question is here, are we in a that's not what I wanted. Let me see if I can delete that one and try that again. Are we in a, and I think we probably are, and that should address how I trade this market. Are we in some kind of a bear flag? And how does a bear flag typically resolve? If we are, it resolves down. So I think it'll be interesting to see what happens. But as I look at the market, I have several things that bother me. One of them bothers me is this pattern looks to me more like a bear flag. Bear flags break down. We still have not broken back above the 200. We haven't gotten up to it. We're even failing here at the 17-day. So yes, we are at a place where typically the markets rally. And I have to keep that in the back of my mind. We're not going to go to new highs in one day. I'm a little nervous about potential bear flag breakdown. So for me, the better part of valor here is to be cautious, to have raised cash, have less positions. Again, I didn't say that I can't nibble, but being very careful. So that is the spider. Let's look at this from a weekly perspective. And again, a doji on the weekly 50 is interesting. Again, that could certainly tell me to look for a reversal, but it also could be a continuation. All it means is we had a weekly pause to refresh for the market to sort out what it wants to do. So if we pull up now the Qs, and we're going to start with the weekly on the Qs, and you could see similar but below the 50 weekly, we've got a doji. Be interesting to see if that resolves higher or not. Um, Same story as the spiders, I'm afraid. Um, we're going sideways, consolidation, maybe a bit of a bear flag again, well below the 200 on the daily and nowhere close. We're going to have to break above that 200 to go higher. And until we do that, I don't see the need to rush in big in this U.S. stock market. Looking at the diamonds, start with the weekly, and let's enlarge it. This one's probably more bullish looking because 2 weeks in a row it stopped on the 50. This was the big performer in the week. The volume was low. If we look at the daily, didn't really do much, and it's really struggling on the daily 200. Until it breaks above this, it's the same type of a situation as the others. Higher, closer to the 200, but also looking like a bit of a bear flag. The Russell, which is the one that really let us lower, failed here at the 50, failed at the 200, um, failing at the 17, which you've got your death crosses here. All that is bad. Again, what does that look like to you? I know it looks like to me as another bear flag. And then if we look at it on the weekly, you could see the Russells, had a topping tail here, trying to figure out what it's doing. This to me looks like a lot of indecision. If I look at the volatility index, and let's just look at the weekly, we can see that the weekly was down 10, 11%. And if we look at the dollar was up just a teeny bit on the week. It was up 0.39. So is there anything to like here if you're bullish? Yeah, the VIX has come down, but that's it. Not a very attractive rip-roaring market for the bulls. If I look at the gold consolidating at all-time highs, off a little bit. Silver, same thing, off a little bit more. We're going into April, super seasonally strong for oil. It'll be interesting to see if it starts to come up here. I think with the potential that we'll see settlement with the Ukraine and maybe the Russian oil come back online legally, maybe that's going to keep the price of oil down, as is the drill baby drill. Natural gas consolidating after a massive run up, and then the 10-year and the 30-year both look like they were up 0.45 on one, up about the same on the other. So 10-year up at the end of the week. But if we look at a weekly chart, you could see, let's just raise the 10-year up, kind of consolidating right at the 50 and not a big weekly move. All right, next thing I like to do is look at my buckets to get a sense of performance of the overall market and how it's changing. And so you could see we're starting to move, well, we're moving all over the place, to be honest. We were moving to the right on Thursday, and it looks like we backtracked a little bit. The number of stocks below the Bollinger Band still at 4, 4, 4, and 4%. Still is not a big number by any means. There's no stocks above, hardly any stocks above. You could see more gray on top here, which means we shifted to the left some. So a little bit weakening. We saw the broader market was weak when we looked at those bars on the daily performance. The market breadth didn't give us any new signals, but you can see that the broader market NYSE had a nice bottoming tail, but the NASDAQ composite was certainly much stronger. Volume-wise, on Friday was big on both, but remember, it was an options expiration day, so we'd expect that. Stocks above the 17 in green, 50 in white, 200 in red. Down a little bit on Friday, but off the lows, not a signal. If we look at new high, new lows, they were negative on both. Advanced decline, negative on both. And up-down volume were negative on both, which just shows that Friday was not a strong day. And these are the absolute numbers for the new high, new low, advanced decliners, and up, down. From a ratio chart to get a sense of what was working in the market and what was not, a couple of comments I'll make. Technology's trying to get off the bottom, but it's still weak, as is discretionary, even though they did well on Friday. Communications has hung up much better. Financials, it looks okay. Now, the defensive play, staples have come down, as have real estate to some extent and healthcare, but they're still in the upper part of their range, and energy kind of looks like where it's at right now as well. Industrials looks okay. So really, except for discretionary tech, things don't look that horrible in the ratio charts of the S&P sectors versus the spider. Now the layout is where I make my top-down magic come from. Just open up a chart here just so I have it there, AAPL. So basically, I use standard set of indicators for me that are the same in every platform. Up top, this white line is a high-low oscillator. When it's above 95, we're extended to the upside. When it's below minus 95, we're extended to the downside. I consider both to be no buy, no sell areas. The next are a daily on top, and then on the bottom, a weekly bongo. In periods of time when the daily's red and the weekly's blue, you're retracing in a downtrend. Periods where it's blue on the weekly and red on the daily as you're in an uptrend and you're pulling back in the uptrend. On the charts, the 17, the 50, and the 200, and this white line represents over here relative strength, and you can see the relative strength of Apple has certainly come down of late. Down here is regular volume. Top dot is my EMS signal, which is a short acting, fast firing. I don't use it too much except as a confluence indicator on daily charts. It worked well for me when I was in between companies and had non-solicit non-competes and was trading on a more frequent basis. The blue dot is called the CPR. That's another crossover system buy-sell signals. Then you have four dots, best seen over here. The top dot is a gap, then volume, then breakout, then momentum. The yellow line is a squeeze, and the dots after the squeeze is the market breaking out or up or down after coming out of the squeeze. We have a Wilder PSAR, which is nothing different than the standard. The blue represents a green candle low, the red a red candle high, sometimes felt to be single candle reversal signals. Here is one of my favorite indicators. We take the relative strength of the instrument versus the SPY. We put on a moving average, and we look for crosses above or below and how long. And down here is the on-balance volume with a moving average, and again, looking for crosses and how long. Up here in my grid, I have symbol, last, change, percent, and then how many of the dots are up versus the dots are down. And you could look for Scholastic, for example, had 5 dots, 1 plus 4 up. Now, not my kind of play, something that's in a big downtrend, but I look at relative strength and OBV look good. It's not extended, maybe. I look for how many down dots. Let's see something that had a lot of down dots just for curiosity. Something that's Valmont, VMI. And this is just a massive breakdown even below the 200. Then we look at the bongos. If it's red, it means the bongo is up. If it's green, if it's red, it's down, green is up, and then how many days? We got the daily, the weekly. Then I have 3 different sorts that are looking at short, intermediate, and long-term momentum, relative volume compared to normal volume at a given time during the day. What is the volume of the instrument? I mean, this is a cheap stock, but had massive volume on Friday. And then OBV, if it's green, it's above the moving average, red is below, then the number is how many days. And then next are that relative strength versus the spider, and then a weekly version of that, and it shows you green is above, red's below, and how many days or weeks. So I can go right into, well, I'm starting with the JAS list, which is now up to 3,693 stocks. We run it every weekend. NYSE, NASDAQ, and Amex, and then we filter for $1 and 100,000 shares, and that's my trading universe for the week. I then assign each one to a sector and industry group. So when I go into top down, I have 11 sectors. I got about 140 industry groups. I can look at sectors and rank them by performance, and the only one that was up was communication services. Now, this is not the S&P 500 sector. This is that broader 3,693 stocks. In that list are 166 stocks, and they are components in a number of industry groups. So I could say I'm interested in communications, but let's just look at the top 3 groups. And now I only have to look at 62. So top down, I identified the best sector on Friday. I can do this intraday, the 3 top industry groups in that, and I could rank them by, let's rank them by short-term momentum, and I can start looking. Meta. Now, I'm not a big fan of any of the FANGs right now, the momentum stocks here, the big caps, but it pulled back to the 200 and bounced. This could be an interesting place to buy it. The next one on the list was Scholastic, which I already talked about. That might be a great place to buy it. I just don't like buying things after that big of a sell-off until they base. Spotify, I liked it more on Wednesday when it came back, touched the 50 and bounced. That looked interesting to me. Reddit looks really interesting. It's pulled back. It's now consolidated. It's sitting on the 200. I would put that 200 for a stop if I thought about taking a trade. That's not investment advice. But this one I thought looked interesting. And then I will go down the list and see Trivago looks good. Anything else that looked interesting to me. Now that's another way of doing top down. I'll show you another way. Perhaps the way to do it is to take just on the industry groups, let's take 2-day momentum, which is how I like to sort, and let's look at the top 10. Now sometimes we lose the name of the industry group because something changes or it's a group of stocks that are IPOs that don't have one. And we'll look at what's in there in a second. So here's the top 10. I got 137 stocks. And again, I can do the same thing with the sort and just start banging through these. Booking looks good. AutoZone, if it wasn't so expensive, looks interesting here. Melly, setting up to run again. It's always good to buy this thing on pullbacks. Costco, I talked about it at the high on one of my videos. I said, I don't understand the valuation. This thing's too expensive. Is it now cheap enough? Well, it's pulled into the space here, so it might be something to look at. Carvana, I worry about fraud because of how they do. Some of their financing with related companies. I'm not saying it's anything bad. I read the same thing you probably read from some of the short sellers, Hindenburg. There's something to be careful on. Restoration Hardware. This is a high flyer. It's expensive stuff. It's sold off hard, but is it bouncing down here where it's bounced before and something to look at? So again, I'm taking industry groups that are leading and I'm looking at the stocks in them. That's another way I like to do top down, at the same time looking at some potential stocks to buy. Or I might take short-term momentum, and take the first 3 again. And now, instead of the entire universe of stocks, I just have the industry groups in those top 3. And I might do the same exact thing and look at 1, 2, 3. Either way, however you prefer to do your top-down trading, you can, there's many ways. Here's a healthcare stock that had an FDA approval on Friday. So I could go here and open up the news. FDA approval for Amultra. Potential revenue over 68. I don't know if 68 what. Strong pipeline. FDA approval, FDA approval. You know, some of this is probably priced in, but even though it had a big move on Friday, this might be something to look for. Maybe there'll be some profit taking, a chance to get in cheaper. Booking is showing up everywhere. I mean, booking looks interesting here. Now, booking has some interesting seasonality. Let's just pull up an oldie but still a goodie. SEAS, Seasonality Trader app. And this used to be the old Magenta, and then I'm not going to go into all the craziness that happened between the different proprietors that were involved. Make sure there's no updates. I got them all updated. And let's see if BKNG. When this thing came out, I thought it was the greatest of the seasonality programs. So what I wanted to show you, because I just remember this from historically, if you look at March 21st to May 1st, and it's March 22nd, so that would have been Friday, it's been up 6 out of 7 years, and with a return of average return of 7.6%. And you could see we're going into a green period of the year for bookings. So, if you want to play seasonality, that's one. A lot of you probably have wealth charts, because I know that several people that follow me came from there when I presented. Um, you know, Wealth charts does not have all my what's what I'm using, breath tools, but besides that, it's got amazing amount of stuff, and I use it all the time. Um, so the other thing I could do is I could just come over here, BKNG. Priceline, which is the prior name of booking, had great seasonality, and I just don't know if all the years are captured here. So let's set this to the right time frame. It is now, pull this out a little bit, and let's go in here, make that to the closest date we can. Come on. 4:15. Nope, that's too late. All right. That's 3:18. Let's take it to a month later. 4:22. And you could see here 9 out of 10 years it was up. Average up year is 4.62%. Average down 1.22. So it is a strong seasonality time for booking. And I just wanted to point that out, whichever program you like to use for that. Again, AutoZone looks great if you want to buy a lot of a $3,000 stock. Impact Biomedical, obviously, flip to weekly might look better. This is a stock that's been dead for a long time that I'm not going to even look at. I talked about Mercado Libre. We know earnings are out. You can flip up here in the earnings tool, and you can see earnings came out February 20th. You've got to May 8th, and look at the surprise that we saw on earnings and revenue. You can continue to go down that list. Galecto, I don't know this one. Cheap Healthcare. There's Meta again. So that's one of the things that I like to do to as a top-down trader, is to just go through various scenarios of looking at the top industry groups and letting the best stocks come up to the top. Now let's go back here to the impulse list. The other way I'll do it is I may just say, hey, let's look at the top momentum of all the stocks in the universe. And there's the same ones. Anilin, Bookings, AutoZone, forgot that one. Mealy, don't know much about Kinsale. This is a dividend payer. It pays a little bit of a dividend, kind of a sideways, not that exciting to me. PRA, I think, was a takeout. Here's that Galecto again. A lot of blue dots. It's just a cheap stock. Even Boeing. All right, so one thing I like to do is I like to scan for certain stocks, certain patterns. So let's look for above the 200, volume greater than 500, price greater than 5. Let's look for my favorite 2-day momentum up. We're not going to find many because it's not a good market. So I'll take away the 200, and we still don't have any. All right, how about momentum down? And let's just add the momentum down filter. And we'll see that there's a couple to the downside. So Royal Rogers Communication trade up to the 50, broke down. I'd rather buy things closer to their highs. Was this one look better? I mean, here's one, Mueller Industries breaking down, still close to the 200. Again, it's another way to look for potential signals. Here's one that failed the 200, now broke through the 50. Does it fall all the way back down to 55 and retest here, and is that enough of a move? So I could look for long and short signals. Let's kill that one. Another one of my favorite long signals is the multi-time frame CPR. That requires a buy on both, and that one's a takeout on the daily chart, as well as if I flip to the weekly chart, the last signal had to be blue as well. We'll just flip through these, and then I want to show you something else. Tonics, nope. Luminar, laser. You know, I like how it's moving up here. It took out the 50, but I don't like buying below the 200. But with all those blue dots, it's probably worth looking more at it. Cytokinetics, again, same story. Royal Gold, consolidating up here. Gold has been super strong. All right, and last thing I wanted to show you, and let's just kill this right now and bring back the 3600, is how I make a watch list. So, hot list A is just the FANGs, Amazon consolidating under the 200. Could look worse, but could look a lot better. APP, not a FANG stock, but one that seems to be moving up, one that I repurchased. Google, no. Meta, talked about it, it's pulled down to the 200, an interesting area. Microsoft, it's going to have to heal before I'm excited by Microsoft, and right now it's bear flagging underneath all the moving averages with a death cross as well. Netflix, which has been a big leader, pulled back, broke above the 50. I think it still looks great there. Nvidia, not until it breaks above the above that, probably above the 200. Don't like the death cross there. And Tesla just shows even great stocks with lots of fans can fall. It looks like it's doing a bear flag down here. So let me kill hot list. So hot list B is one that I take my combo leaders list to. So those of you that actually, that looks like the high relative strength list. Let's make this the combo list. So hot list B, I'm going to make the combo list. So I'm going to right click, import from a file. I'm going to find my Dropbox because that's where I keep everything. And then I'm going to find this week. And I'm going to look for my combo buys, which is right here. I'm going to click on it. And it takes a second, but it's going to populate. So that's B. For C, let's put the high relative strength list. Right click, import from files. I wish it would stay there, but it's not that hard to find. And so find this week. And these are lists that I prepared earlier today. So this is a number of high relative strength leaders type lists. This has always been a good place for me to fish from. DGNX is one that's a little different. Looks like an IPO. Might be worth going to look at that. And then my positions, these would be things that I own in various portfolios that are long and short positions, and I might just want to pull them in. I update this list and all my lists on the weekend, every weekend. So let me just pull that one in. There is a reason why I'm doing this. Scott Holdings, long and shorts. All right, let's look at longs. Now I'm going to create a list of what I was interested in from buys perspective, and I'm going to build upon this as I do further work this weekend. So what I do is I look at over 1,000 stocks on Friday night. That's sort of been my routine for so long that my wife knows that Friday nights are not date night, it's stock night. And she's gotten used to it over the years. So this was the list I put together, and I put a list, albeit a very small list together, of potential shorts. And I always start the weekend by building these lists that I'm doing right now. I just want to show you again. You right click to get import. then you got to go to where you keep them. I keep mine in my Dropbox, and each Dropbox I have is dated, and I have lots of back years of all my stuff, so I can always go and look at it. And shorting candidates is just a couple stocks. I'll tell you on my review it was a lot easier to find long. So let's just go flip through the ones very quickly that I liked. Adams, we've been talking about it for a couple of weeks. This is where I started getting interested and did some trading around that. It's giving a little bit of a flag here, so I'm still interested in that. Adaptive, don't have a position. Cheap stock, big pullback, breaking out here. Affirm, this was great. It's pulled back to the 200. I'm just going to watch it down here. These are not a buy list as much as a watch me every day list. Alamo Gold, we looked at Royal Gold already. Gold is something that's interesting. Again, flagging at highs. We looked at the Analyst several times. Angio Dynamics, not yet. It's still well below the 50. Some of the foreign banks look good. This is BBAR pulling back and looks like it might be getting ready to do something. Argentina Bank, BMY, Bristol Myers, Baldwin breaking out here. Chewy, I mentioned I like this pullback. It's got volume breakout momentum and a CPR, so a lot of interesting signals here above the 200, but it's got earnings. Compass is a real estate company. Here was your flag breaking out from a flag. CRK is an oil company producer. Easy Pawn, I guess if we have to go really cheap because the economy pulls back, one wonders if this is something that might go somewhere. CPR signal, volume, and a breakout. Genius Sports breaking out. Another foreign bank, GGAL. Halo is one of my favorite biotechs. We were talking about it down here. It's had a beautiful run. Another gold play, Kinross Gold. Landbridge. I'm always going to check on earnings. Earnings came out March 5th, so you got plenty of time. Give me a little bit of a pullback here. I'd wait for a breakout from the flag. We talked about Mealy. MSDL, this pays a dividend, I believe, and let's look at it. A 9% dividend. MicroStrategy, I'm not in it now. It's a big mover. Seems to be stabilizing. I'd be looking for a break over the 50. Netflix, we've talked about. OKTA, pull back to the 50 and a big breakout, giving us a little flag. Flags to me are chances to get back in. Ali, talking about flags, I'm waiting for a breakout over this line that we put in a couple days ago. Ouster, cheap stock, breaking out here. PAG's a really cheap stock. I think it's technology e-commerce platform. Again, a watch. Penumbra, pull back to the 50. Progeny, again, not something I'm running out to buy. I'm telling you ones I like the best. Palantir is one that sitting on the 50, which we often call free parking. Notice how many times it came back here. It moved up above it on Friday. I think Palantir looks good here. PUC, P-U-K, is Prudential Insurance, and it pays a little bit of a dividend, I think. Let's see. Let me look at that again. Nope, no dividend. This is a stock I looked at last weekend. I don't have a lot of quantum computer exposure. I just would like to see it break out of this area before I go back in. I think it's very speculative. Restoration Hardware we talked about. Probably my favorite of the whole bunch. Continues to go higher root. Again, I'd love to buy it on a pullback, but God only knows if you're going to get one. Look at these numbers. Change of earnings. Change of revenue. Big surprises. Pays a small dividend. Next earnings are April 29th. I think Root right now is one of my favorites. SIG, ugly chart. Don't know why it gapped up. I didn't think earnings were out. Are earnings out? Earnings are out. They came out on the 19th. This is a jewelry retail. It's pretty darn cheap. The PE multiple is crazy low. Forward is 2166, but backwards it's very teeny. Spotify, another big leader, pulled down to that free parking and moved up. I like that. Super Value, this is Super Val is another international bank. Looks like it's getting ready to go higher. TDS, I liked. Telephone and data, why? Pull back, basing sitting on the 50, getting ready to go higher. One that I gave you months ago, TGTX, the company I said is transitioning from being a cancer company to an MS company. This was a great opportunity over here, pretty much at all-time highs. Twist, biotech, a watch, not a buy. Uber, maybe getting ready to set up. You could certainly come in here and do what I like to do, which is connect the tops and ask you. It's already broken out of the flag, so Uber looks interesting. VIAV, another technology communications play. Again, I like things that pull back to the 50 and break out. And similarly, it's probably broke out of a flag here, whichever you want to connect. Typically, I connect it to the most recent high before the current bar. And if I do that, let me hold on a second. Let me undo that. All right, let me kill that one. So I just highlight it, hit the delete key, go back and touch it, touch that, touch that. I think that one broke out of that flag. I think that VIAV Solutions looks good. Then a cheap thing that's been down for a long time. The only reason why I'm paying attention to it is its relative strength, OBV turned up. The relative strength also crossed positive 3 bars ago on the daily. I don't know anything about this. It's dead money right now, but it's something it's called a watch list. I showed you the things that I liked. So, what I've done in 46 minutes, I gave you my deep impression of what the market's doing and why. And I think the market's going to chop. I wouldn't be surprised to see it rally up into those 200s, and then we'll see if it fails. I showed you how to look at a top-down perspective by leading sectors and industry groups. Then I showed you the different ways to find the leading stocks in those groups. Then I went to a bottoms-up perspective and did a couple of quick scans to show you what things that I liked. And then for those that own the software, I showed you how to import lists. And then I ran through the lists that I thought were attractive. Some of them were attractive. They don't always look that good the second time around. And I hope you have a great rest of the weekend. I hope you are safe in these markets. These are not easy markets. And for those who have not been trading a long time, not a great time to start. Small position sizes, stops, and you'll get a much easier time when the wind's at your back so you can attack the markets. Take care.